Welcome back to the weekly stock portfolio update videos. Currently, my two stock portfolios are sitting at a combined value of over $102,000. This is made up of the $57,113 in my stake portfolio and the $45,300 in my Vanguard portfolio. Overall, it's been a very rocky week for investors. As you can see, my stock portfolio is down 1.76% in just the last day alone. When we look at some of my big holdings, you can see everything seems to be in the red. And today I'm going to be going through Alphabet's recent earnings, Amazon's recent earnings, and Meta's recent earnings, and speaking about how they affected my portfolio, what they might mean for you, and just a bit more general thoughts on the topic. First of all, I wanted to do a quick update of how the portfolio is sitting. I did invest another $700 into Google stock after its recent 7% drop. The stock did then drop another 3% the next day, so that was a bit of a rough timing, but I still believe I got in at a reasonable price, especially with the dip. I did a short on this, but yeah, when I saw Google dropped after its earnings, I still thought it was decent earnings, and it being the lowest PE ratio out of all the big tech stocks, or the Mag 7 pretty much, I thought this was a good opportunity to buy in, but I'll talk about it more later. And I invested another $700 into Google. So my total equity is now up to $4,615 USD, and that's around 25 shares. What's happened now with the pullback in the stock value and me buying in more, this has taken my total return down to 12.9%, or around 527 USD, with an average share price of 164. In my Vanguard portfolio, I also invested some money. I put around $1,000 into VGS, which is the International Shares Tracking ETF, and that's also recently pulled back a little bit, but I think it will correct more on Monday. And now that I have around 204 shares in there, and I'm getting closer to hitting that $30,000 mark that I was talking about. The first stock I wanted to go through today and speak about their earnings was Alphabet. As this is the stock that I just invested more into, we can read through and see why the shares dropped as much as 9% on their revenue miss and soaring AI investments. Alphabet shares fell as much as 9% in the after-hour tradings Tuesday after the company reported fourth quarter results that missed on revenue expectations. The company also announced that it plans to invest $75 billion in capital expenditure in 2025 as it continues to expand its artificial intelligence strategy. The company also reported a disappointing cloud revenue of $11.96 billion during its quarter compared to the $12.19 billion expected by Wall Street. As it said, Alphabet shares fell more than 9% in after-hour trading on Tuesday after the company reported its fourth quarter results. Having a look through some of the numbers, you can see the revenue was $96.47 billion compared to the $96.56 billion. So they just missed out on that. The earnings per share actually beat. It was $2.15 versus $2.13. And then some of the other major numbers that the Wall Street was watching included YouTube advertising revenue, which was $10.47 billion versus the $10.23 billion. So they did beat on that. And then Google Cloud revenue, which was another major one that people are talking about, that was $11.96 billion versus the $12.19 billion expected. Alphabet's overall revenue grew nearly 12% year over year compared to more than 13% growth in the same quarter last year, so just a little bit less. The company's revenue growth, as well as its growth for its search business, its YouTube ads business, and its services unit were all slower compared to a year ago. So whilst the numbers potentially could have been higher, just the overall growth year on year wasn't as big, which is something you can expect from such a major company. And even the best companies miss their earnings and miss numbers. But when you look at these numbers, they are so big. When you talk about $96 billion in revenue, basically $12 billion from Google Cloud revenue. So these are massive numbers. And Google's advertising revenue growth was 10.6 compared to the 11% year ago. Same with its search revenue. So you can kind of see the trend and understand why the company was selling down. Another major point people talked about was the company also announced its plans to invest $75 billion in capital expenditures in 2025 as it continues to expand on its AI strategy. This is above the $58 billion that Wall Street expected. Alphabet said it expects capex for the first quarter to come in between 16 billion and 18 billion, which is also higher than the 14.3 billion that was expected. Alphabet's capital expenditure for the quarter was 14 billion, which is higher than what was expected as well. The CFO said on the earnings call with investors that the figure primarily reflects the company's investment in its technical infrastructure, with the largest component being investment in servers, following the data centers to support the growth of our business across Google services, cloud, and DeepMind. Obviously, as AI continues to grow and scale, it's going to be a massive capex expenditure. You can see this across all the big tech companies when they reported their earnings. But yeah, when you compare it to the cloud business, which was a big one, I'm also an investor in Amazon and Microsoft. So as you see here, it says, despite the miss, the cloud unit revenue increased 30% from the year prior, which is a really big jump. Alphabet has been drawing profit from the cloud business as it tries to keep up with the market leaders, Amazon's web service and Microsoft Azure. And again, I'm invested in both. So yeah, I'm kind of across this whole space, so I'm not too worried. Asked if the revenue for the cloud company unit could have been higher with more compute capacity, the CFO said the company had strong demand for AI products in the fourth quarter. And yeah, that seems to kind of be the case. When you look through overall the earnings, they just missed on some of their numbers. And when I saw it sell it off 9%, I was quite surprised. Obviously, at the moment with how markets have been so volatile and they've kind of shot up in most recent years, people are kind of looking for a reason to exit stocks, it feels like. And a drop in 7% in the last week is massive. And yeah, that's why I thought it might be a good time to buy in. Obviously, you have to go do your own research. But yeah, this was, I thought, keeping a long-term outlook is what I tried to do. And I've always tried to dollar cost average. And I haven't really been putting as much money into my stake portfolio. So I thought this was a good time to invest in a company I believe in long-term. Another company that I invest in that reported earnings is Amazon. So you can see in the last week it's down basically 3%. It's traded pretty flat prior, like the rest of today, but it's down 4%. And when you look at the last month, it's still in the green around 3%. Amazon's earnings was also kind of similar, where Amazon's issues disappointing revenue forecast and points to weak growth on the record. Amazon reported better than expected earnings and revenue for the fourth quarter, but it gave disappointing guidance. So whilst they even beat out in their stuff now, investors are looking forward. And again, there's so much priced into these tech stocks that it's really hard to, at the moment, to justify sometimes the valuations. And the same thing, I think people are selling out or looking for a reason to sell out. The earnings per share was 186 versus the 149, so they smashed that. The revenue is 187 billion, and it was expected around 187 billion. They just beat out, you can see. Amazon Web Services, 28.8 billion versus the 28.8 billion expected, so bang on. And then the advertising just missed, as you can see, 17.3 versus the 17.4 expected. Amazon expects sales from this quarter to go between 151 billion and 155.5 billion. The company said analysts were expecting 158.5 billion. So these are just absurd numbers when you see them. The guidance anticipates an unusually large unfavorable impact from foreign exchange rates, the company says. The impact amounts to 2.1 billion or 1.5%, Amazon said. The US dollar index, which measures the greenback against a basket of rivals, hit its highest level in more than 2 years last month, ahead of President Donald Trump's inauguration. The dollar climbed steadily from late November through January and has fallen slightly. Again, I'm someone in Australia, so I've felt that completely, especially when trying to invest in my US portfolio. It just kills when you're transferring money over, you just lose a third of your money, the value of it, which is rough because there was a point where it wasn't like this bad. But yeah, ever since last year, especially back end of last year, it's just been going down. That's one of the reasons I've been putting a lot more money into my Vanguard portfolio, and my goal is to get this to 50,000, hopefully in March. That'd be a really big goal for me to tick off if I could do that. So yeah, companies, especially if they have a global presence, they'll be feeling it as well. Amazon is one which is getting a bit of a mixed results from investors. I've heard some people saying they're using this as a buying opportunity, or they're kind of sitting still. I think obviously it didn't get as much as large of a sell-off as Google, around half the size, but still a decent sell-off. The net income almost doubled to $20 billion, or $1.86 per share, versus from $10.6 billion, or $1 a share a year ago. The CEO of Amazon, Andy Jassy, said it has been on a cost-cutting campaign since late 2022. The company laid off more than 27,000 corporate employees in 2022 and 2023, and the job cuts continued into 2024. Amazon has been bolstering profits by trimming expenses through continued strength in high-margin cloud business. Again, this was another thing like with Google. Cloud seems to be a major focus for investors. Amazon's operating margins, the profit left the accounting for costs to run the business climbed to 11.3% in the period from 11% in the prior quarter. And its sales in the Amazon Cloud division were a hair below the consensus estimates, but grew faster than the same quarter last year. So people really seem to be looking into the cloud side of things. Again, I'm being completely transparent. I am invested in Microsoft, Amazon, and Google. They're all three of my biggest individual stock holdings. So I do have exposure to all of them, and I'm not really biased towards one. I don't use one personally for like a business or anything like that. But overall, if I did have extra money sitting on the side, this might even have been a good time to invest in Amazon with this dip. But yeah, at the moment, I've kind of stretched the money that I want to invest already in. And like I said, I put another $1,000 into my Vanguard account and then $700 into my stake. So I've kind of used this money. The sad thing was I put the money into my Vanguard account before the dip, and I was happy with Google. I got to buy the dip, but then it dipped a little bit more. But you can't really, beggars can't be choosers. So again, I'm trying to keep a long-term outlook to all my investing. So keep a 10, 20 year horizon, kind of remembering that I'm quite young still at the moment, and I have a long time to continue my investing journey. Another company I briefly wanted to touch on was Meta. This was a stock I used to own many years ago. One of the stocks that I killed myself for selling. I wish I held on. I sold it at the worst time possible. Obviously, when I sold it, it did give me the opportunity to put that money into other stocks which have gone up as well, but Meta's just been doing phenomenal. And their shares popped after the company beat on revenue. Meta shares were slightly up in after-hours trading. Sales in the fourth quarter jumped 21% year over year, while net income grew 49% to $20.8 billion, which is crazy. Yeah, the EPS, $8.02 versus the $6.77 expected, and revenue of $48.39 billion versus $47 billion expected. So they've just been killing it. The CEO, Mark Zuckerberg, said he expects 2025 to redefine the company with the relationship with the governments. Obviously, there's been a lot of news about that, with Dana White joining the board and all types of things with that side of things. So whether it's the fact checking or whatever you want to look into, Meta has been in the news a lot. But taking that aside, they've done really, really well as a business. We now have the US administration that is proud of our leading companies, prioritizing American technology winning, and that will defend our values and interests abroad, he says. Sales in the fourth quarter jumped 21% year over year, while net income grew 49%. Meta says it expects first quarter revenue to be between the range of $39.5 billion and $41.8 billion. So yeah, everything seems to be going in the right direction for Meta. People were really worried about how big they could grow, especially people who just kind of had the brain or the outlook of just Facebook. I know when I sold Meta, it was when they kept going on about the goggles, the Meta Quest and stuff like that, and he kept going on about VR, and I was like, this is horrible. They were constantly plummeting money into this, and no one was happy with it, and then they kind of changed the outlook. By that time, I'd already sold, but yeah, the company's really, really turned it around. So I think if you're a Meta investor, you've probably been very happy with your investment. I mean, even if we have a look, we can see just kind of how the stock's been trading. Yeah, it's up 46% in the last 6 months, which is absurd. When you look at the last month, 16%, the last year, 52%, the last 5 years, 236%. So yeah, you can see this downtime it had here back in 2022. I was an idiot and sold during this, and then since then it's just been on a absolute rocket, just shooting straight up. But yeah, overall my portfolio is down. I'm still up around 31% or 13,562. Many of my other holdings have done okay, like Costco. This is a good thing about diversification. You look at the last week, Costco's up 7%. So while some of my other positions are down, Costco's up, and 13% in the last month. Obviously, I did sell some of my Costco shares, but I'm still have it at around $1,400 in equity. But yeah, it was good to have Costco go up whilst the overall market was a bit rough. Talking about the overall market, VOO, which is my market tracking ETF, is, you can see in the last month, it's still up 2.2% and up 1.1% in the last week. So that's one of the reasons why I invest in the broader market as well. And I make sure to keep this portfolio at least 50% in Vanguard's VOO market tracking ETF. Talking about Vanguard, in my Vanguard account, I've been growing my international shares ETF a lot more than my Australian shares ETF, VLC, just because I think I see more growth internationally than I do in Australia. One of the good things about Australia is the high dividends. So like I said in one of my older videos, I got my biggest ever dividend in January, $400. So I reinvested everything. And that's my plan with all dividends, is just to reinvest it. I had someone comment asking if I would potentially ever sell my stocks to purchase property. I think if I was to sell any stock, I wouldn't sell it all. I like diversification. I enjoy investing in companies. But maybe my VLC position, I might liquidate some of that, because again, that's $16,000 I can just tap into to help towards a deposit. And my VGS position, getting really close to that $30,000 mark. And again, overall, I want to get my Vanguard portfolio to $50,000. That would be a really big goal for me. And again, I'm getting that compounding interest now. The numbers are starting to get bigger and bigger, and my dividends are getting bigger. Everything's it's going on the right path. So 2025, I really want to use as another foundation year, where I'm just consistently doing the right thing, dollar cost averaging, no matter what the market does, building my stock portfolio, maybe buying a property, and just kind of setting myself up for the future. Having a look at the Excel spreadsheet, this kind of helps just show kind of how things are looking. You can see my American and my Australian portfolio. Again, my American portfolio, I want to keep VOO at around 50%. It's sitting at 49%, so pretty close. Microsoft is the next biggest at 16%. I do not want Microsoft to be this big. I really should have liquidated some of it and sold some of the position when it was up around $470. But now it's down at $409 a share, so it's not worth selling now. It's just there's no point selling now while the stock's on such a dip. It would just be a stupid decision. 13%, you can see next is Alphabet, Google. 9% is Apple. Apple used to be just as big as Microsoft, but I sold out some of my position in that. And then I've also got the smaller ones, like Amazon's a bit bigger, and then Costco is the small one at 4%. My Australian portfolio, you can see 65% of it is in the international shares tracking ETF, VGS, and 35% is in Vanguard's Australian ETF, so VLC. So that's how things are kind of weighted there. This just kind of shows the portfolios tracking over time. Gives kind of a nice view for myself as motivation as well of how the portfolios have gone. I update this at the end of every single month, and you can see the nice trajectory where things have just been going up and up and up. And this is just as long as I've been tracking it. Obviously, I started before this, but that's how things are looking now. This was just a general update video of how the portfolios are looking. Feel free to comment how your stocks are doing, and thank you for watching.